Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, metals is the space to watch. The Nifty has opened at 10,414, 10,415 thereabouts, so very close to the recent high of 10,430, which has been a bit of a problem point. Let's see if it takes that out, or again there's some bit of resistance. The Bank Nifty is opening 34 points higher at 27,914. Hindalco is your top gainer, at least in the morning, so 2.5% higher. Very large volumes on Hindalco. That normally is case, but we're almost approaching 1 million shares on Hindalco, and not even a minute has passed. So big move on big volumes. Gale is up 1.5%. Mahindra and Mahindra is up about 1%. Tata Steel, Z Entertainment, Dr. Reddy's, these are few stocks where you've seen some gains. Vedanta is higher. On the downside, not too many. Cipla ahead of numbers is down about 0.5%. ICICI Bank is down 1/3 of 1%. Slight bit of downtick in Axis. That's down, of course. But now the Nifty is making a move again, 10,420, 100 points higher on the Sensex is what we have at this point in time. Decent opening, Sonia.
Well, decent opening for the frontliners. The mid-caps are absolutely flat. The advanced decline ratio has 700 stocks on the advancing side, so that is positive. INOX Wind really is the stock of the moment. It's up almost about 9-odd%. It was a positive surprise this time, better than estimated. So INOX Wind looking pretty good. SRF, good numbers coming in over there, so up 1.5% there. A couple of more numbers to look at. Edelweiss, let's just pull that up for you. The losses have actually widened in the insurance business, and that's what the street doesn't like. It's down 5% right now. Adani Enterprises was a weak set as well. The profits were down 43-odd%. Emphasis 2 under pressure. Revenue growth of about 4.3% this time around. But the stock of the moment really is Hindalco from the frontliners, as you mentioned, because of the Novelis numbers, so up almost about 2.5% over there. A couple of more stocks to look at in the broader market, along with Edelweiss and Adani Enterprises. Adani Power, Motherson Sumi also falling, so Motherson Sumi now down about 2-odd%. Some disappointment in the EBITDA numbers for some of their verticals there yesterday. So Motherson Sumi under pressure. But in the frontliners, let's take a look at M&M, because now M&M is up almost about 1-odd% as the tractor growth guidance has been scaled up for the full year. Otherwise, it's very flat for the mid-cap index right now. A couple of more stocks, perhaps Future Consumer is up about 2.5-odd%. Manpasan Beverages is up about 2-odd% or so. And a couple of these names like Jamna Auto, etc. looking pretty good. Anything else that you spotted?
The multiplex operators, Sonia. So INOX Leisure 5%. PVR is looking smart. Some kind of a hope rally building up that maybe they'll get a favorable, at least a stay maybe from the court if nothing else. So those are two stocks worth looking at. Max Financial is seeing some traction early on in the day, as is Jet Airways. So that's a stock that's building up on volumes and price as well. Very quiet, Anuj. I mean, indices are actually 0.0% on most of the indices right now.
Yeah, take a look at the futures data, which is quite interesting because both Nifty and Bank Nifty futures are in the red. So obviously the first trade has been taken on the short side. Let's see. Once again, we've gone to 11,430 nearly and slipped from there. Ashwini, your thoughts on market opening and any trades that you're taking?
See, my sense is that we are getting fairly close to 27, 850, 900. So this is a time where you start to buy into the Bank Nifty as well as the Nifty, because it's possible that the market goes to the lower boundary and recovers. So that's something I would try out, as long as, broadly yesterday's low is holding on. So this is the kind of dip I was looking for early morning. Let's see how this one plays out, and then we see if we need to change something.
Okay, well, a couple of stocks in the broader markets do deserve mention. VIP has hit a new high once again today. That stock has now almost tripled in the last 12 months. So phenomenal moves coming in on VIP Industries that now it's at 566. Exide is also at a new 52-week high, so 286 rupees now on Exide. Sudarshan, any thoughts on the market opening and on individual names? How would you trade something like a VIP, Dabur or an Exide? All these stocks sitting at new highs today.
Well, Exide was in my buy list, so you would go and buy it. Dabur, you want to wait for a consolidation, and that comes always. And I can't have an opinion on VIP Industries. It's rallied a lot. So you have to wait patiently for a correction. That will happen in the next few weeks. The markets, we wait for 11,400 approximately in the cash futures Nifty. If it comes towards that, we go and buy it.
Okay. Mitesh, your thoughts on the opening and a specific view on GAIL. It has some positive news flow surrounding it and therefore it's gaining higher. Next levels maybe on this one?
Yeah, so I think, GAIL should do very well. I think it had managed to get past the earlier highs of 380 last week, and then we saw some kind of pullback, and then the stock is recovering. I think once it gets past 390, which is its highest ever level, 392 in fact, I think the stock should head towards 425, 430 in the short term, so I would be quite positive over there. On the market, nothing much. I think, you will possibly should be preparing yourself for about 3-4 days of sideways activity, and in one of those days, if you get a 50, 60, 70 point kind of decline, that will be a good buying opportunity.
All right, Ashwini, what's the big call for the day then?
The big call is buy this early morning dip and see if we are able to take out the upper end of the range, because you cannot keep going down while global markets are still up. So maybe this first half dip should lead to a rally getting into the second half.
Okay, gentlemen, thanks a lot for taking us through the market opening. We'll come back to you at around 10 a.m. Joining in ahead of the two-day MK conference, which begins tomorrow, are our market masters, Krishna Kumar Karwa, the MD of the company, and of course we have Sindhu Samir as well, co-head institutional equity sales of MK Global Financial Services. Good morning, Sindhu. Of course, it's good to see you after a long time. I think when I first joined CNBC TV18, you were the first guest, so that I used to talk to. So good to have you in our studios. It's a bit of a deja vu for me.
Thanks.
Okay, I'll come back to you in a bit. But before that, Krishna, your thoughts on this, the last few weeks. And the way the market has reacted. Good time for you to have this conference as well. But you reckon we have passed the worst of the correction in the broader market?
Yeah, definitely. I think 3-4 months ago, there was too much of euphoria as far as the small cap, mid cap was concerned, and a whole host of factors got into play, including regulatory challenges, etc. And we saw a deep correction, which was possibly waiting to happen. And I think what has happened in the last few weeks is that if you see the corporate performance across the board, that has been fairly positive. I would say more than 60-70% of the companies have come up as per expectations or better than expectations. And so post the correction, in the breadth of the market has improved substantially in the last few weeks. That's the as far as large caps are concerned, they have had, so the Nifty has continued to do well, basis 5, 6, 7 large cap companies doing very well. But for Nifty being all-time high, there was hardly any euphoria as far as the mass average investors were concerned. And you could also possibly see that your mid-cap, small-cap indices are still a distance away from their peaks, which they had reached in maybe Jan before that. So I think it's a recovery. I mean, post the deep cut which had happened in the small cap, mid cap, there is a decent amount of recovery. But I still feel that there will be a decent amount of volatility which will still be there in the small cap, mid cap segment, because going forward, liquidity is going to be a major challenge, both global as well as domestic liquidity. And you also see that as far as the domestic flows into domestic mutual funds, etc. are concerned, they are stable at 7,000-8,000 crores. But until unless you have a bigger amount of flows, maybe the small cap, mid caps is the segment where invest or domestic houses would be reasonably cautious.
Okay, well, good morning to both of you. I just want to talk a little bit about this confluence itself. You have, 100 companies and over 450 investors that are participating in this confluence, and a lot of interesting companies, right? Madison Sumi, HDFC, ICICI Pru Life, etc. Krishna, good morning. Just to take that point forward that you made about the MF flows. This time we've seen in the month of July, flows have fallen to 8,500 crores compared to an average of around 10,000 plus that we had in April, May, etc. Would you be concerned about that, or do you think that this is just an aberration, just a blip, and that flows will resume on the upside?
No, you have to be careful. I think SIPs, which are around 7,000-8,000 crores, that's a very decent amount of flow, which possibly will continue to be there. But I think the discretionary flow or the large ticket investors, they are the one who try to time the market, and possibly that is where we are seeing a lot of reduction in the flows, and maybe let's see when they become negative, if they become. And so the domestic flows are giving a lot of stability to the markets. The SIPs, which I think the domestic mutual fund industry in the last few years, the kind of education that they have done, and I think it's clearly reflective of the retail participation in the market. So I'm not so concerned in terms of whether the flow will become negative. I don't think so. It can get muted, or rather it may remain stable at these levels. That could be a possible scenario which we are playing out. And there is a X amount of paper which is always there from the government or from private corporates, etc., which is expected to come into the market in the next 1 year or so. So you require decent amount of flows to continue to flow.
Sindhu, morning. In fact, I want to bring you into this conversation at this point. The thing is, SIP flows are good and they're sticky, but they alone probably won't cut it, because that's still 900,000 crores at max coming into the market every month. On the institutional side, what is the mood like out there? Because while the secondary market flows have been dwindling, look at what happened with HDFC, the IPO. There, the money is just swelling. So what's the institutional sentiment?
So institutional sentiment right at the start of 2018 was fairly reasonably cautious. But everybody seems to be surprised by the rise in Nifty which has taken place. All said and done, coming back to the retail flows. Now, even if 6,000, 7,800, 8,000 crores might be marginally dipping, but look at the absolute value of it. We were just discussing that 3 years, 4 years back, we used to think that we'll see a day when you will get an absolute inflow of $1 billion. So we are getting that. At absolute level, this is still astounding numbers. And I remember when I started my career, my father said, open a PPF account. These days, whenever my daughter will be starting her career, I'll be giving her a very different advice. It will be a SIP account. So the cult of equity and the virtuous returns which have been made over the last 10, 15 years, there is a qualitative, there is a change in the mindset which has taken place. And look at the per capita income which India is showing in last 3 or 4 years, the increase in it. That will see to it that we don't worry much about crude oil prices. Also, we have some surplus capital for financialization to take place. So there is a slow grinding wheels of economy which are percolating down to individual disposable income, which are making these changes happen. So yes, there will be some kind of a hiccup, but if in the long arc of things, it really does not matter that much.
By the way, Jubilant Foodwork is at new all-time high, and I discussed that because that is one of your top picks, Sindhu, from the MK Group. Again, consumption has done well, but this argument about the same set of stocks making new highs and making a bit of a mockery of valuation. So how to value these stocks now? At current valuation, for example.
Okay, first things first. So, let's contrast FMCG with pharma. All said and done, nobody is fearing that the business model of FMCG companies can have a regulatory challenge. They can just plunge. The earnings in pharma in last 1.5 years plunged by 25–30%. So there is no fear of that kind of a hit coming on the FMCG space. Also, in last 2 quarters, this sector was supposed to be compounding at 16 or 15% forward. Now, in last 2 quarters of earnings, this sector is getting forward, as per consensus numbers, will be compounding somewhere around, say, around 17 to 18%, and the leaders will be compounding at 18 or 19%. Add to that, I don't know why it is not being discussed, that the ROEs in the business are notching up. In last 1 or 2 years, they have gone up by 3 to 4%. And I'm talking of the leadership in FMCG. So that is also happening. What we are debating is a potential fear of derating, which can take place, but if somebody is ready to take a 5-year view, this sector still makes sense. That is our view, is that, yes, valuation can be debated, it is a subjective matter, but in terms of the business model, it is getting superior. The slow grinding wheels, again, of consumption in India will see to it that there is not a very big scary moment in this sector and space.
Yeah, in fact, hardly any scary moments, right? I mean, we've seen such a big growth there. The other space I wanted to talk to you about was this chemicals. This packaging films business, because SRF is one of your topics. It's been your topics for a while. Once again, we've seen very good numbers come in from this company. Do you think there's more to go for this sector?
I think KK sir is better placed. He's a resident expert on chemical space. He'll tackle it better.
See, I think the specialty chemical space, there are the sector has got re-rated and then last 18 months you can say possibly the sector has been kind of consolidating. But the tailwinds as far as from the China angle itself, I think a lot of capacities over there are closing down for various reasons. So that's one big tailwind that has. And if you look at individual companies in the sector itself, I think they are reaching that size and scale where they are able to now become market leaders in their chosen segments. And also global consumers or global customers, they would also want to de-risk themselves, and they are using India as a manufacturing base. So they want an alternative. So you see many of these companies are able to have contract manufacturing opportunities, etc. So all in all, the specialty chemical space, there is a lot of opportunity and a lot of scope. I think whether you go for fluorine-based chemistry or benzene-based chemistry, every individual company has kind of defined itself in the chemistry that it is specializing in, and that's where the opportunity is. If you look at every company in the space and look at it, the domestic companies, the biggest guy in town probably only 12,000, 13,000 crore market cap. So still there's a lot of scope for many of these companies to grow. Maybe in the last 18 months they have seen some consolidation, but we are very gung-ho and positive on this space from a medium-term perspective.
Okay. Gentlemen, very interestingly, I think in the top picks part of the portfolio, I find both ICICI Bank and HDFC Bank. Now, my question is this. If we are looking at the next 12 months incrementally, which stock might do better, or which set of stocks? Private sector banks versus the underdogs, which is the corporate-facing banks.
So we cannot talk about individual stocks, but just to add, to take this question forward, I think as far as retail banks, the retail private banks, they have done exceedingly well in the last so many years. The challenge was in the corporate banks in terms of their performance, in terms of their NPAs, etc. But at the end of the day, there is always a light at the end of the tunnel, and possibly we are closer to the end than the beginning. So my sense is that corporate banks, they should possibly outperform in the next, you asked the question specifically for the next 12 months. So from a 12 to 18 month perspective, I think these are the banks which are more corporate facing. They should be able to deliver stellar returns, is my take broadly. But also you need to appreciate the fact now that each and every bank in the country is talking of, we want to go retail, whereas the retail leader himself is increasing his exposure to the corporate sector, if you look at the numbers. So that's where the guys who are already there in that business possibly should do very well.
Okay. Krishna, you'll have a lot of NBFCs in your conference. We have HDFC, AMC also listing, a lot of life insurance companies. This sector all of a sudden has opened up. You are selective here, you're saying. What kind of NBFCs do you think will still do well in this environment?
I think if you see, I'll put it the other way around. Where are the headwinds today? The headwinds are possibly in the housing finance companies. They are the ones which are in a rising interest rate environment. They are possibly going to be struggling for, and there's huge amount of competition in that sector. And so that's one segment of the business in the NBFC sector which possibly may struggle for maybe a year or so. And so that's where the challenge is. But otherwise, if you look at the rural India facing NBFCs, they seem to be in a sweet spot in terms of, because the growth seems to be in excellent in the rural part of the country. And NBFCs which are focused on rural India, they seem to be doing very well. So that's one segment where we continue to be positive on. And the other segment, which is on the consumer financing or the unsecured loans, etc. So you have the leaders over there who continue to do very well. So that's one segment which we believe which will continue to do well. You mentioned about the AMCs, and yes, that's one segment which part of our thought process, and so AMCs will. It's a good long-term story whether to invest in AMCs or wealth management firms.
But can I just ask you this? Because we had this conversation yesterday with one of the bankers involved in one of the recent issues. The question is whether you can keep valuing AMCs on AUM basis and give multiples of 12 times, 13 times. So that's fair or not? This gentleman had a view that start looking at price to earnings, even for AMCs. So just because numbers are ballooning the way they are, I want to understand how you value these companies.
I don't think so. We can straitjacket as a percentage of AUM or as a PE. I think somewhere in between is the way you should go to, because ultimately this is one business which is out of intellectual capital you create your return. So your return ratios are infinite, kind of infinite return ratios are there. So to just value and don't look at it from a 1 year, 2 year perspective. You should look at it that what is the penetration of financial assets in retail India and what can be in the next 3 to 5 years. And if you will factor that into play, then I'm sure you will, I mean, if all of you are not investors, then you should be invested.
Okay. Well, Sindhu, you know, you have some very interesting companies at the confluence. One of them is Motherson Sumi. Now, I don't want to talk specifics, but what's your own view on how to approach these global market leaders in their sectors? Because, you know, we've seen a bit of a slowdown as far as earnings are concerned, but the managements are very optimistic about the growth going forward. So how do you tackle it at a time like this?
So I'm not naming any company, but just look at these companies. Just 2 or 3 years back, there was a crisis. They have come out very effectively. If you go back 10 or 12 years back, they were just nothing but a microcosm of the OEMs in India. Now suddenly the world is their oyster. So these business models have proven that these are not India plays. These are not only pan-India plays, these are pan-Asia plays, perhaps pan-world plays. So there is a business resilience in their model. They have scaled their models both on the top and bottom. And the businesses increasingly are morphing into superior businesses. So, I mean, I remember 2002 and 3, people used to deride these companies that there's hardly any free cash flow coming out from these companies. And lo and behold, when I look at the balance sheet of some of the companies, especially the leaders, sometimes I think that these are quasi FMCG plays. Some of them. And when I say some, there are hardly 3, 4 in that space. So I think in a quarter or so, that too in the rising commodity space of problems, they can show some stress. But in the long term, I mean, these are places where one has to be there.
Just to add, I mean, you have to look at these companies from their track record. I think no analyst will be able to understand or read these companies. You just have to see how they have delivered over a 5-year, 10-year time frame, what they have promised, and versus that how their delivery has been. And you continue to believe that if the management is promising X and their track record is so strong, then you should give them the benefit of doubt that they will deliver going forward also till they don't deliver. So I think that's the way to analyze these companies rather than micro understanding. And if you look at all the acquisitions that many of these are global companies. These are only, they're based out of India, but these are multinationals.
Oh, absolutely. And no taking away from that. But you guys have a great confluence. Thank you for joining us. And we will try and touch base with you once again post the confluence is over to get the key takeaways. Very interesting set of companies.
Thank you, and thank you for having us over.
Thank you. All right, let's move on. Edelweiss Financials, right? The numbers came out. They did see losses in their insurance vertical. Let's hear it out from Rasesh Shah himself.
Gross equity base is now 8,226 crores. And our return on equity excluding insurance for this quarter has been 19.8%. So even on that, we are more or less on target, and we hope to continue on that. Importantly, the asset base, our balance sheet size for this quarter is now at 61,800 crores. And the customer assets that we manage in our asset management business, in our wealth management business, in our asset reconstruction business, all of them put together are now at 1,78,000 crores. So getting very close to $30 billion number of customer assets.